$5.9 trillion wiped out in 30 minutes. That's not a typo, and Wall Street is calling it a technical glitch. But the evidence suggests something far more catastrophic just happened. I mean, you've probably seen market crashes before, but this one's different. This time we were looking at an 8 sigma event, the same odds as winning the Powerball twice in a row. But what does this actually mean for silver investors? And why are major government mints suddenly shutting down sales in the next 24 hours? Well, let me explain. Disclaimer, let me start with something that should send chills down your spine. Gold and silver just wiped out $5.9 trillion worth of market cap within 30 minutes. Yes, you heard that right. 30 minutes. To put that in perspective, we just witnessed wealth equivalent to the combined GDP of the United Kingdom and France evaporate in less time than it takes to order a pizza. This isn't just unusual. This is a move so extreme that it defies normal market behavior entirely. We're talking about an 8 sigma event here. Now, for those who don't live and breathe statistics, let me break down what 8 sigma actually means. The odds of this happening naturally, through normal market forces, is the same as winning the Powerball lottery twice in a row. Think about that. This isn't a correction. This isn't profit-taking. This is the market structure completely breaking under extreme internal strain. We're seeing instantaneous deleveraging, cascading margin calls, collateral evaporation, and forced selling all happening at once. Translation: the system just broke. When precious metals, assets that are supposed to be safe havens, stores of value in times of crisis, vaporize trillions in minutes, they're telling you something explicitly. And we are living through a real paradigm shift. The old rules don't apply anymore. The game has changed. And for silver investors, this is exactly the kind of chaos that precedes the biggest moves in history. Now, here's where it gets really interesting, and this is crucial for understanding what's actually happening beneath the surface of these violent price swings. If you look at the pattern of selling this week in silver, you'll notice something very telling. Nearly all of the selling has occurred during U.S. market hours. This isn't coincidental. This is the United States dumping digital derivatives and paper promises, while the rest of the world is actively buying and accumulating physical metal. Think about what this means. While American trading desks are smashing down paper silver on the COMEX, creating these massive artificial price drops, physical buyers across Asia, Europe, and the Middle East are saying, "Thank you very much," and backing up the truck. This pattern has been consistent for as long as many veteran traders can remember, but it's never been this extreme. The disconnect between paper and physical has never been this obvious, this violent, or this unsustainable. This coordinated dumping isn't random. When you see all the selling concentrated in a specific time window, when U.S. markets are open, you're watching a deliberate attempt to suppress prices through paper manipulation. But here's the beautiful part for silver investors. It's not working anymore. The physical demand is so overwhelming that these attacks are failing in real time. And that brings me to the most important point you need to understand. This is not your father, silver market. In years past, a smashdown that took silver prices down 15% in an hour would trigger an avalanche of sell stops and induce days, even weeks, of follow-on selling. The entire upside momentum in silver could be completely short-circuited by a COMEX paper dump of a few billion ounces. The playbook was simple: dump paper, trigger stops, create panic, cover shorts, rinse and repeat. That was the old game. But look at what just happened. Silver plunged to $106, a truly historic drop, and then what? It retraced over 2/3 of that vertical plunge within hours. We're talking about a $10 bounce from the low, and the bull market simply resumed like nothing happened. Silver is now back trading above $117. This is unprecedented. The physical demand for silver has become so powerful and so unrelenting that even historic downside moves are being completely erased before the trading day is even over. The old playbook doesn't work anymore because the fundamentals have shifted so dramatically that paper manipulation can only create temporary dislocations before physical demand overwhelms it. And get this, the bullion banks, who are short hundreds of millions of ounces of silver, are growing, increasingly desperate to extricate themselves from the tenuous position they currently find themselves in. They're so desperate that they've induced 2 separate $15 raids on silver this week. 2 massive coordinated attacks in 1 week. And what do they have to show for it? Silver prices right back above $117. Nothing. They accomplished absolutely nothing except proving that they've lost control. Instead of inducing massive follow-through selling like these attacks used to, silver immediately bounces and recovers the moment the COMEX paper dump is completed. Why? Because unrelenting Asian demand from India and China simply will not allow the bullion banks to tamp down silver prices enough for them to unwind their massively underwater short positions. The banks are trapped, and they know it. These desperate attacks are the thrashing of a cornered animal. Now, if you want to see the smoking gun that proves the entire silver market has fundamentally changed, you need to look at what's happening in Shanghai right now. The Shanghai silver premium has passed $25 per ounce. Let me say that again, because this number is absolutely staggering. $25 per ounce premium. Shanghai silver is currently trading at $135.99, while Globex silver is at $110.72. That's a $25.27 premium. And this is not a one-time aberration. This spread between Shanghai and the LBMA or COMEX silver prices has been growing $2 to $5 per day. Per day. For silver investors, this Shanghai premium is screaming one thing: monetary regime change from the West to Shanghai. When physical silver in Asia commands a $25 premium over Western paper prices, you're watching the global financial center of gravity shift in real time. The West can print all the paper silver they want on the COMEX, but Asia is setting the real price based on physical metal, and that price is substantially higher. This spread is simply not sustainable. Something has to give. Either Western paper prices need to converge upward to meet physical prices, or the paper market needs to completely decouple and become irrelevant. Either way, silver investors holding physical metal are sitting in the catbird seat. You own the real asset while the paper markets are desperately trying to maintain an illusion of control. And here's where the story gets even more bullish for silver holders. The system isn't just showing cracks. It's actively breaking apart right before our eyes. First, U.S. refineries locked up. These are the facilities that process raw silver into deliverable bars and products. They're backed up, overwhelmed with demand, and many have stopped accepting metals entirely. When the refineries can't keep up, that's your first signal that physical demand has exceeded the system's capacity to process it. Then, by midweek, the retail market began to fracture. Reports surfaced that many local coin shops across the country had halted metals purchases. Why? Capital constraints and slow turnaround times. Think about what this means. These shops normally make money by buying and selling precious metals with a small spread. But the demand is so intense and the supply chain so backed up that they literally can't afford to tie up their capital in inventory that takes too long to replenish. The velocity of the market has overwhelmed them. But it doesn't stop there. A source high up in the retail bullion industry just confirmed that a major government mint is shutting down silver sales in the next 24 hours. We're not at liberty to disclose which mint by their request, as it hasn't been publicly announced yet, but a major supply-side shock is about to hit the silver market. When a government mint, an entity specifically designed to produce silver coins for public purchase, has to shut down sales, you know the supply situation has become critical. First, the refineries locked up. Then local coin shops stopped buying. Now major government mints are shutting down silver sales. Do you see the pattern? The entire supply chain is breaking down from the bottom up. And we haven't even mentioned the London Metal Exchange yet. Just yesterday, Bloomberg reported that the London Metal Exchange delayed Friday trading due to a technical issue. Now we have to ask the obvious question. Is the issue that technically they're out of silver? When one of the world's major metals exchanges suddenly has technical difficulties during one of the most volatile periods in precious metals history, that's not a coincidence. That's a symptom of a system under extreme stress. The dominoes are falling, one after another. The infrastructure that's supposed to facilitate smooth trading and delivery of physical silver is buckling under pressure. And for those of you who are silver investors, this is exactly what you want to see. Scarcity drives value. When the system can't deliver physical metal despite massive demand, prices have only one direction to go: up. Here's what's really happening. The bullion banks and the paper markets thought they could control silver prices indefinitely through derivatives and paper contracts. They built massive short positions, betting that they could always suppress any rally by dumping unlimited paper contracts. But they made a fatal miscalculation. They did not account for the possibility that physical demand would become so overwhelming that their paper dumps would be immediately absorbed and erased by buyers who actually want the metal. Every time they raid the price with paper, Asia steps in and buys physical at a discount. Every smashdown becomes a buying opportunity for those who understand the real value of silver. The banks are hemorrhaging on their short positions, and the more desperate they become, the more obvious their manipulation becomes, which only reinforces the bullish case for physical silver. We're watching a historic transfer of wealth happen in real time. Those who hold physical silver, the actual metal, not paper promises, are going to be on the right side of the greatest precious metals move of our generation. The system is breaking. The old mechanisms of control are failing. The regime change from Western paper dominance to Eastern physical dominance is accelerating. And the real short squeeze, it hasn't even begun yet. When the bullion banks are finally forced to cover their hundreds of millions of ounces of short positions in a market where physical supply is already constrained, where refineries are locked up, where retail dealers can't source metal, where government mints are shutting down sales, and where the Shanghai premium is screaming that physical silver is worth $25 more than paper prices suggest, that's when things get truly explosive. These 8 Sigma events, these $5.9 trillion market cap wipeouts in 30 minutes, these desperate $15 price raids that fail within hours, these aren't signs of a market top. These are signs of a system fighting against an inevitable transition, and the old guard is losing control, and they're pulling out every weapon they have left. But it's not working. The next few days are going to be absolutely insane. The system just broke. And for those holding physical silver, that's the best news possible. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.